Hello, this is Jordan, and this is your precious metals video market update. This is being recorded on the late evening of Monday, December 8th, 2015. And starting off, let's look at a daily chart of gold and consider where this rally might go. Gold, of course, became very oversold on the daily time frame, and that had a reversal there last Thursday, and then big follow through on Friday. Of course, today, fairly big pullback, down 15 bucks. Well, I guess it's not that big. Anyway, gold last week already made a low of 1045, and it rocketed up to nearly 1090. I see most resistance at 1110 to 1120. The 50-day moving average is at 1117 and declining, but it wouldn't be a surprise to see gold rally a little bit above that before turning down. But anyway, that exact price, 1117, is actually the 50% retracement of the recent decline, and so we could see the rally. The 38% retracement is, I believe, 1100 or 1101. So that is an initial target. But back to the 50% retracement, you could see the market rally up and get close to that. So if 1117 is the retracement, maybe 1110, 1115. That's just something to think about as a target. And after the huge move last Friday, which there was probably a lot of short covering, it might take a little time to digest that move. Maybe a few days, maybe a week or so. But ultimately, I think gold will probably push up above 1090 and get at least to the low 1100s. But I do think this is a bear market rally and that we're not going to see anything huge here. And I've been posting this chart quite often because I think it's just such a fantastic big picture chart for gold. I mean, we can clearly see the major resistance at 1180. Gold was forming a bear flag. It intra-month it tested 1180, then it broke down from the bear flag in November. And note that the recent low of 1045 came very close to the early 2008 high and then the early 2010 low, and the market really took off after that early 2010 low, I think at 1040 or 1044. And also, I mean, I don't have any Fibonacci analysis on this chart, but I know people have been talking about 1035, 1040 as a strong Fibonacci target, and I think I've referenced it once or twice in past videos. So it's not a surprise that gold found support at 1045. But anyway, even looking at the monthly chart, you'd have to zoom in on the last 3 or 4 months, but there's heavy resistance at 1140 and also resistance at 1120 and 1120. You look at the daily chart. I mean, I mentioned 1115 on the last slide, so those are some targets to keep in mind if gold is able to push above 1115. So 1120, and then best case rally scenario would be 1140, but I really don't see this going above 1120. Yeah, just to get back to the big picture, I mean, it's quite clear the strongest support is at 970, and then you have your worst case bear market bottom scenario at 890. And already coming down to 1045, I mean, what this could be telling us is the next leg down could be the final leg down. I know I've said that too many times, but I mean, with the recent low at 1045, and then there's no short-term support until 1,000, and then looking at the monthly chart, you see 970. So just call it 970 to 1,000. That's going to be the strong support you want to look at probably early next year. And I'm not covering the gold stocks in this update, but as I wrote about last Thursday, the relative strength in the gold stocks has been very positive. It was hinting that this rally was coming, and the gold stocks will just be something to keep in mind over the coming months, because it's possible that they could consolidate or continue to outperform gold if gold breaks down and goes lower. So if gold stocks were to do that and buck the trend, I mean, that would be telling you that, the sector is on the cusp of a new bull market. So again, that's getting a couple months ahead of ourselves, but it's just something to keep in mind on the gold stocks. I'm going to be really interested to see how they perform, assuming my scenario is correct and we see gold make a new low, and this is just a bear market rally. Next, let's talk about the COT. You guys know that I chart everything as a percentage of open interest. We have the net position, the gross shorts, gross longs, and then open interest. I'm including that at the bottom because that's also instructive. The net speculative position as of last Tuesday came all the way down to 0.7%, so less than 1%. I mean, almost. Commercials are only short by 2,900 contracts, and so the speculators, I mean, looking at the other side of the coin, they're only long 2,900 contracts. But looking at the breakdown of the shorts against the longs, because the net is just about, the difference between that, the short position of 49%, I mean, that's at a 14-year high. I mean, that's fairly high, but I mean, you saw it got bigger than that in 1999, 2001. But the gross long position, and same thing in silver, it's even worse in silver, but I'm surprised, it's at 50%. I'm surprised that we just haven't seen really any capitulation from the longs. Again, it's at 50%, and that remains above the late 2013 low and above the 2007 low, and way above the early 2001 low. So, and to go to open interest, that's coming down a little bit. We would like to see that fall to new lows and break to new lows. That would be a signal of capitulation, as would more selling from the gross longs. But note that open interest declined from 99 to 2001. Then it rose with the bull market, and note that there was big capitulation in open interest in 2008. And also, you go back to 2008, the gross long positions came down quite a bit. Well, I should say they came down quite a bit from 06 to 07, and then also a little bit in 08. But just looking at gross longs then compared to where they are now, it's just surprising that the gross long position is at 50% and not, close to a 14-year low or a multi-year low like the gross short position is. So I'm just looking, if we do get that next move down to 970, I'm looking for capitulation in the gross long position, and so maybe you see that come down to 40% or 35%, and the gross shorts go up a little bit more to 55. And so I definitely think that we're going to see the commercials get net long here, and just because the net position is at a 14-year low, I mean, that doesn't signal the end of the bear market. Next in this chart, we have the U.S. dollar index at the top and then the Fed funds rate at the bottom. And I marked the times where the Fed began a new rate hike cycle. And look closely, the red horizontal lines, those two times the Fed started hikes and the U.S. dollar kept going up. And those two times are most similar to today because those are the only times those hikes were preceded by U.S. dollar strength. Or in other words, those were the only two times the Fed began a new hike cycle when the dollar was in a well-established bull market or uptrend. So that does not, I mean, I know there's some charts floating around and some data that shows that, I mean, it's counterintuitive, but it makes sense from a contrarian point of view that the Fed begins a new hike cycle and it's priced in, and, the dollar can decline for not just a few months, but more than that. But again, looking at history, looking at the data here, it really makes a strong case that after the short term, the dollar is probably going to keep moving higher. And I mean, looking at the technicals on the dollar, it it made a weekly reversal at 100. It certainly looks like it's going to correct for at least a few weeks, maybe a month, maybe even a little bit more than that. But ultimately, the way it's setting up, after a correction and maybe a little consolidation, it could blast above 100, and that could coincide with gold making that final move lower. So keep all these things in mind. And if you haven't already gotten a free copy of our book, go to thedailygold.com/book, and you can get a free copy there. We're going to do an updated chapter this month, and if you're already on my email list, don't worry, we'll send that out. You don't need to sign up again, but I wanted to let you guys know that. And that's all for today. If you want to follow more of my work, you can go to thedailygold.com. If you have any comments, questions, feel free to email me, jordan@thedailygold.com. Thanks so much for listening and watching, and I'll talk to you guys again in the next week or two.